Hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be and whatever you may be doing. So, this is 50 Pips, 18th of September, 2016. No trade calls, no recommendations, every response for their own stuff, and we're here for educational purposes only. So, what's going on? As usual, on these Sunday updates, basically, I want to keep them fairly short. If you're interested on our outlook on most of the charts, just look back on the blog. Pretty much everything's there, or hit me up on Twitter. But here we just try and look at quickly, what are we looking at? What are the most interesting things? As we go into the week, we've been talking about this week for a long time. It's central bank week. So basically, we have monetary policy meetings out of Australia on Tuesday. We've got Bank of Canada speaking. And then really Wednesday is the day where we have the BOJ press conference. We've got the FOMC and we've got the RBNZ rate statement. So it's all about Wednesday. Okay. So going into this Wednesday, our outlook hasn't changed, and we've had some fairly nice moves. Had been for dollar strength into these meetings, for crude weakness, etc., etc. For pound, we had that beautiful reversal on the weekly. So we'll try and look at those things. But if you're also interested, go back to the previous weekly outlooks, because the broader outlook hasn't changed, and we have a 1-hour session on YouTube, and that details everything pretty nicely. So what's going on bonds, right? So bonds are fairly interesting here. So our outlook has been, again, that we've put in a structural top. We were looking for a move back into the 70-90 point, at which point break below, we're looking this accelerate into the 166.80s, right? So what's happened? We're having a decent bounce exactly where, most people would expect it to bounce. If you look at that initial move, so A to B here, right? You see we're traced back, held this 50 back zone, broadly speaking. And as we came down in extension, we hit this 161. A lot of people taking profit here, a lot of confluence into key previous supports, this 161, a lot of people profit taking, a lot of technical traders flanning up into this zone. So not surprising to see profit taking here. Now, what's interesting is if you extend the fib to the new low, you see that you've got all this confluence of this previous resistance support zone, the 50 back, kind of descending trend line coming in there. So everything's pointing towards there. So the big question is here, are we going to get a little bit of a healthy correction that could possibly extend all the way into here? You've got, so that previous resistance, the 50 back, the trend line, you've got the moving averages, everything lining up back there. And then that's going to be the line in the sand going into the week for, structurally much bigger move or another retracement. Or are we going to move down in extensions and come straight down from this whole area, come straight down into the 162.40s? So again, we'll have to see what happens. Those are all particularly interesting levels. The way we're looking at it, no day close below 166.80. This could move down in extensions back into the 162.40s. Day closes above this level, then we'd expect it to potentially spike up back into this multi-confluence zone. And for us, this would be a nice shorting area, okay? So that's what we're looking at bonds. Then in terms of the, again, USD JPY, we still think the risk is to the upside. Again, keep in mind, if the BOJ disappoints, then that 100 is likely going to get tagged in a millisecond, and then it's all going to be about follow through, right? This is still the key point, hold above below. If post BOJ, we hold below the 100 after having cleared this, this is most likely something you do not want to stay stubbornly long, and there is no reason why we won't try to accelerate very aggressively, as the days come back into the 95, 94. So day close, heavy below the 100, you want to be very, very cautious to try and catch this to the long side. As long as we hold above there, chances for a spike. If we see more positioning and squaring into the BOJ and we hold above the 103.50, then we expect the 105.50s to get tagged, and that's going to be our big bull bear line. If 105.50s let's go and we get daily closes back above, then we'd expect, towards the back end of the year, this to continue to try and make its way back into the 110s, 110.50. Okay, so fairly interesting chart. key zones. Cable, again, if you're interested, we discussed it last week in the Sunday outlook. I think we discussed it also in the Wednesday outlook. Again, very difficult to get a nicer reversal than here, multi-confluence zone into these resistances. We said, expectation for his move back into the 129.50, 129.00. Again, you can't expect this kind of velocity. I think nobody was expecting it to move that quickly, but the technicals are pure, so really can't complain. This is going to be a big zone. Expect healthy market to bounce off this level. If 29.50s, 29.00s let go, then we expect back down new lows and an aggressive attempt to take out yearly lows. Very nice, very technical, pretty, very nice action. The other thing that's particularly interesting, if you haven't had a look at it, and we've talked about Kiwi a lot, and we've looked at it on in detail. In case you haven't looked at it, I just want to draw your attention. It's very, very early, but keep a look at take a look at the monthly chart if you haven't looked at it. Very nice technicals. Again, this is the moving averages we have are just 50, 100, and 200. But look at the way this is, selling off right at this 50 confluence zones. If this ends up closing negative on the month, this very nice pattern for the downside, as we discussed on the other chart. So I just wanted to bring that up quickly, right? Just because I think it's interesting. If you haven't taken a look at it, look at it. Then, before we go into the most important thing, most interesting things, which is the ES, I would say don't forget to keep half an eye on Deutsche Bank, right? So on DB shares. I think that, again, you have to keep, we usually don't do this, but I think it's an interesting one. That's why I like to point these things out on Sunday, just on these outlooks. I'd keep half an eye, quarter of an eye, an eighth of an eye, whatever you want to do on this chart, right? No matter what happens on equities, if this starts to break these lows and we start trading below the 11s, especially if we start to trade below the 10s, so it means single digit, but especially if we get some traction below these lows, then I would be very, very cautious in terms of trying to play risk on anywhere across the board. I'd be very, very careful. So that's something I'm going to have up and be looking at. Now, in terms of equities, fairly nice action. We had this ES sold right back down. We came back into these 2133s, which we've been talking about, a very strong pivotal level, and we bounced right at this 2100. Right? That's a very interesting zone. I mean, even if you look at it for something like a weekly level, a lot of people are going to be drawing all kinds of different trend lines here to try and point to what's happening, right? You see how if you take the bodies, you take the wicks of the candle, whatever, there's this 21 is pretty important, right? We're not huge fans of doing that, but all people will be looking at also its previous support resistance. It's really a key zone. So keep an eye on this. As long as we can bounce off this level, then expect the market to try and stay bid. If we let go, we would expect those 2010s to come into play very, very quickly. Okay, so coming into this week, no real change. It's all about action around the 2133s. And are we going to hold above? And in that case, you'd expect to see a test of these 2165s or back below, and where's that all-important 2100. Now, keep in mind that the week after triple witching, September quadruple witching, whatever you want to call it, tends to be down a little bit. So it's definitely going to be very, very interesting. We got that Fed day, market tends to rally, but usually it's a decent fade 24 hours to 48 hours afterwards. Now, the other particularly interesting thing, before I forget, is, and I think a lot of people are picking up on this, is the difference between what's happening on the ES, right, versus, and all the other equity indexes, whether against what's happening on the NASDAQ, right, which is holding extremely bid. Now, again, don't be fooled. This is all Apple, right? Apple's coming in to save the day. So the big question is, who's leading, who's not leading, which one do you pay attention to? Are you going to pay attention to pretty much, the Dow, the ES, et cetera, that are holding fairly heavy off those highs? Or are you paying attention to the NASDAQ, which is holding extremely bid, right? Now, at this point, the way this is trading, it looks like it is just too tempting to not take out and print new highs on the NASDAQ. Again, I would just still consider it a little bit of an outlier, right? I'll be watching it, but my focus is more on the ES. But clearly, you know, Apple is there to save the day. The other thing I'd be keeping an extremely close eye on here, especially if you're trading equities, as we said before, is again, you know, we don't usually talk about these, but I'd continue to have that Deutsche Bank up just to see how that trades. But I think the levels are fairly clear. We should have a very interesting week. Again, I'd like to wish everybody an awesome one. Stay safe, stay focused, trade small, right? Don't be stubborn. As usual, thank you so much for liking the content. Thank you so much for sharing it. Thank you so much for saying hi on Twitter. Always very much appreciated. And I'll catch you guys soon, and we'll try and do some kind of update. You know, maybe not Wednesday morning because it might not be that interesting since we got all that stuff coming up later on the week. But, you know, stay posted. Have an awesome one. Take care, guys. Bye-bye.